So, let me introduce to our members. In the green circle is Muhammad Shafiq Haiqal bin JAMALUDDIN, and the yellow circle is AMIRUL ASYRAF bin NORAZEMI. You can see the purple circle is KHAIRUNSOFIA BINTI MAHEMUD AFZAL, and the last one is me, AISYAH SOPHIA BINTI BADEROL. So let's move to the next slide. Overall objective in the audit of the sales and collection cycle is to evaluate whether the account balance affected by the cycle are fairly presented in accordance with accounting standards. The nature of the accounts may vary depending on the industry and client involved. There are differences in the nature and account title for a service industry, a retail company, and insurance company, but the key concepts remain the same. There are 5 classes of transaction in sales and collection cycles. The first one is sales, cash and sales account. The second one is cash receipts. The third is sales and return allowance. Fourth, write-off and collectible accounts. And the last one is estimate of bad debt expense.
Hello everybody. So for today, I will be talking about the accounts and classes of transaction in the sales and collection cycle. The overall goal of a sales and collection cycle audit is to determine if the account balances impacted by the cycle are reported properly and in compliance with the accounting standard. The figure below is an example of a typical accounts that are under the sales and collection cycle. So in the figure below, we have accounts receivable, sales, allowance for uncollectible accounts, cash in bank, cash discounts taken, sales return and allowance, and bad debt expense. Next, I am going to be talking about business functions in the cycle and the related documents and records. In order to transfer the ownership of the products and services to the customer after they have been sold, decisions and processes are required in the sales and transaction cycle. Currently, there are 8 business functions in the sales and collection cycle. Auditors must first analyze the business functions, documents, and records in order to evaluate control risk and design tests of control and substantive tests of transaction. The first class of transaction is sales, and the accounts available are sales and account receivable. The business functions are processing customer orders, granting credit, shipping goods, and billing customers, and recording sales. Some of the documents and records needed are customer order, sales invoice, sales transaction file. Next, the second class of transaction is cash receipts. And the accounts available are cash in bank and also accounts receivable. And the business functions are processing and recording cash receipts. The documents and records needed are remittance advice, pre-listing of cash receipts, and also cash receipts transaction file. The third classes of transaction is sales returns and allowances. And the accounts available are sales returns and allowances and also accounts receivable. And the business functions are to process and to record the sales returns and allowances. The documents and records needed are credit memo and also sales return and allowances journal. And the fourth classes of transaction is write-off uncollectible accounts. And the accounts available in this class of transactions are account receivable and allowance for uncollectible accounts. The business function is to write off uncollectible accounts receivable And the documents and records needed are uncollectible, account authorization form, and also general ledger. And the final class of transaction is bad debt expense. And the accounts available are bad debt expense and also allowance for uncollectible accounts. The business function is to provide for bad debt. And the documents and records needed are general ledger.
Next is propositive control. We can use one of typical approach for sales. The first one is auditors study the client's flow charts. Besides that, make inquiries of the client using an international control questionnaire. Or the last one is perform walkthrough test of sales.
Now, let's see the test of control. Test of control is the type of audit procedure that we perform in order to evaluate whether the client's internal control works effectively in preventing or detecting risk of material misstatement at the assertion level. While obtaining the understanding of the client internal control, as auditor, we usually try to identify the client control that can reduce the risk of material misstatement. Then we perform the test of control to obtain evidence of how effectively the controls operate in practice before we can rely on them. As a result, we can choose to rely on the controls and reduce some of our substantive works if the client's control work as intended after obtaining the result of the test of the control. On the other hand, if their controls are weak and not effective in preventing or detecting risk of material misstatement, the control risk will be high. In this case, we will need to increase our substantive test in order to reduce the audit risk to an acceptable level. We perform the test of control to evaluate whether the controls are working effectively for two main purposes, which is reduce to substantive audit procedures and obtain the additional audit evidence. On purpose of reduced substantive audit procedures, we rely on the client's internal control. This is when we believe the client internal control work effectively in preventing or detecting the risk of material misstatement at the assertion level. This is the case when we assess that the control risk is low. Hence, we need to perform the test of control to obtain evidence to support our assessment. For obtain additional audit evidence, we cannot obtain sufficient appropriate audit evidence if we perform only the substantive procedures alone. Likewise, we need to perform the test of control to obtain additional audit evidence at the assertion level. This may happen when the client uses the IT system to perform certain business transactions in which no document is produced or maintained. Now we go to 4 types of test of control that include inquiry, observation, inspection, and review performance. Inquiry is the process of asking an explanation from the client relating to the control process or transaction. For example, we may ask the client's personnel for an explanation about inventory counting procedures at the year end. Inquiry is the type of test of control that can only provide limited evidence, as the client employee may not tell us the truth. Also, they may tell us very good control procedures that are described in the paper, but they may not properly perform such a control procedure in the practice. Observation is the process of looking at the procedures that are being performed by the client. For example, we perform this type of test of control by observing the inventory counting procedures that are being performed by the client at the year end. This is to make sure that the internal control of the inventory exists and the procedures are described. Similar to an inquiry, audit evidence we gather using the observation is also limited. This is due when the client employees knows that they are being observed. They may try to be more diligent in performing internal control procedures than when they are not being observed. Inspection is the process of examination of supporting documents related to control procedures. For example, we may inspect the bank reconciliation report to make sure it exists and the procedures are as described. This type of test of control can provide us better evidence comparing to inquiry and observation. This is due to we inspect the physical evidence that the control procedures are in place and performed by the client's personnel. However, we usually perform the physical inspection, for example of records, as it will be impractical to perform on all transactions. Hence, there are usually sampling risks involved here. Also, when we see the authorization signature on supporting document, it doesn't mean that the authorized personnel have properly checked and reviewed transactions before authorizing them. Now, finally, re-performance is the process of the auditor re-performing the control procedures that were performed by the client. For example, as auditor, we may re-perform the procedures of bank reconciliation that was performed by the client accountant. Re-performance is the most reliable type of the test of control and provides us better assurance comparing to other types. This is due we gather direct evidence on how the control works when we use re-performance. The downside of the re-performance is that it is very time-consuming process, as we need to re-perform the whole process of the control procedures that the client has already performed, so we usually do not apply this type of procedure on large sample. In summary, an inquiry procedure alone is not sufficient to evaluate whether the control worked effectively. Other audit procedures such as observation, inspection, or re-performance should be performed in combination with inquiry to obtain sufficient appropriate audit evidence about the effectiveness of control. I want to explain about audit objective related with test of control. The first one is occurrence. We test occurrence of session to ensure that there is proper internal control in place to prevent the risk of overstatement of sales, either by creating fictitious sales invoice or inflating the actual sales. The other hand is completeness. We test completeness session to ensure that all sales are included in accounting transactions.
Hi! Now I will continue to the substantive test. Firstly, what is substantive test? Substantive test is performed to help auditor determine whether monetary misstatement exists in sales transaction. So, I will begin with substantive test of transaction for sale. Then, I will be looking at substantive test of transaction for cash receipt. Alright, the substantive test of transaction are related to the transaction relate audit objective. Alright, we look for the sale transaction. The first column is occurrence. It's mean here the shipment are actually made to existing and correct customer. So, the substantive test auditor may review sales journal and master file for unusual transaction and amount. Also, can trace sales journal entries to supporting document including duplicate sale invoice, bill of lading, sale order, and customer order. Secondly, existing sale transaction are recorded, which is referred to the completeness in audit objective. The substantive test is auditor can trace selected shipping document to the sales journal to be sure that each one is included. Thirdly, recorded sales are for the amount for goods shipped and correctly billed and recorded, which is referred to the accuracy. The substantive test for that is auditor may trace entries in sales journal to sale invoice. Also, recompute price and extension on sale invoice. Relax, there are 3 more points for sale transaction. Alright, posting and summarization. This is referred to the sales transaction are correctly included in the account receivable master file and correctly summarized. Hence, the substantive test, the auditor may use audit software to put and cross-put the sales journal and trace total to the general ledger. Then, the 5th column is classification, means that account classification are internally verified. The substantive test is auditor can examine duplicate sale invoice for proper account classification. Finally, the last column refers to the timing. This means that shipping documents are pre-numbered and accounted for weekly by the accountant. So for the substantive test, the auditor may compare date of recording of the sales journal with duplicate sale invoice and billing of lading. Alright, now we look at cash transaction. The transaction for cash receipt are similar for cash sale. Therefore, the auditor responsibility in auditing cash receipt to identify deficiency in internal control that increase likelihood of fraud. The first column recorded cash receipt are funds actually received by the company, which is referred to the occurrence. The substantive test, auditor can review cash receipt journal and master file for unusual transaction and amount. Next, trace cash receipt entries for the cash receipt journal entries to the bank statement and also prepare a proof of cash receipt. Secondly, cash receipt is recorded in the cash receipt journal, which is referred to the completeness in audit objective. So, the auditor may obtain pre-listing of cash receipt and trace amount to the cash receipt journal, testing for name, amount, and dates. Other than that, compare the pre-listing with the duplicate deposit slip. Other than that, compare the pre-listing with the duplicate deposit slip. Thirdly, cash receipts are deposited and recorded at the amount received, which is referred to the accuracy. The substantive test for that is auditor may obtain pre-listing of cash receipt and trace amount to the cash receipt journal, testing for name, amount, and date. Also, prepare a proof of cash receipt. Thank you because you are still with us. Next, refer to the slide. Audit objective are classification. This is refer the transaction that cash receive. Transactions are correctly classified. The substantive tests are examine pre-listing for the proper account classification. Finally, the last column on the slide refer to the timing. The transaction is cash receipt are recorded on the correct date. The auditor may compare date of deposit per bank statement to the date in the cash receipt journal and pre-listing of cash receipt for the substantive test.
The next slide is possible misstatement. The auditor is concerned with the possibility of three types of misstatement. The first one is sales included in the journals for which no shipment was made. The auditor can wash selected entries in the sales journal to related copies of shipping and other supporting documents to make sure they occur. Besides that, sales recorded more than once. Duplicate sales can be determined by reviewing a numerically sorted list of recorded sales transactions for duplicate numbers. Also, can test for the proper cancellation of shipping documents. The last one is shipments made to non-existent customers and recorded as sales. Normally occurs only when the person recording sales is also in a position to authorize shipments. Deficient internal controls make it difficult to detect fictitious shipments. To test, the auditor can trace customer information on themselves invoice to the customer master file. So there are a few effective approaches to detecting the three types of misstatement. First is trace the credit in the accounts receivable master file to its source. Second, examine shipping and customer order documents. Third, identify improper revenue recognition as a fraud is. Also, another effective approach is existing sales transactions are recorded. In many audits, no substantive tests of transactions are done for the completeness objective. Second one is direction of text. Auditors need to understand the difference between tracing from source documents to the journals and watching from the journals back to source documents. Third, sales are accurately recorded. The accurate recording of sales transactions concerns first, shipping the amount of goods ordered, accurately billing for the amount of goods shipped, and accurately recording the amount billed in the accounting records. Sales transactions are correctly included in the master file and correctly summarized. The proper inclusion of all sales transactions in the account receivable master file is essential because the accuracy of these records affects the client's ability to collect outstanding receivables. Recorded sales are correctly classified. Although it is less of a problem in sales than in some transaction cycles, auditors must still be concerned that transactions are charged to the correct general ledger account. Sales are recorded on the correct dates. Sales should be billed and recorded as soon after shipment takes place as possible to prevent the unintentional omission of transactions from the records and to make sure that sales are recorded in the proper period. Transaction-related audit objectives, key existing controls, test of controls, deficiencies, and the last one is substantive test of transactions.
So that will be the end of our presentation. I would like to thank our respectful lecturer, Sir MOKTAR Haji AWANG, and our viewer for your attention and time. That, ladies and gentlemen, was what we want to share with you. Have a nice day, goodbye, and Assalamualaikum.